A whole life insurance policy is one that you pay for, you guessed it, your whole life. Seem like a big commitment? Well, here's the upside. It builds cash value while you pay for it, and there's a guaranteed death benefit. But because the deal's been sweetened, whole life insurance policies tend to be a bit more expensive than some of the other options that are out there. So how does whole life insurance policies work? What are some of the benefits and misconceptions? And who does this type of policy work best for? How it works. You pay a premium on a monthly basis, in this case for the rest of your life, and when you die, the insurance company pays the people that you indicate, otherwise known as your beneficiaries, a larger amount of money than what you paid in the first place. This is known as a death benefit. What are the benefits? The major benefit of a whole life insurance policy is that one day your beneficiaries will definitely receive the death benefit of this policy. Also, when you start a new life insurance policy later in life, it becomes more expensive. But by locking into a whole life insurance policy, you may be paying higher premiums now, but they might be a lot lower than what you're gonna pay if you start a new policy down the road. And lastly, the money that you pay into a whole life insurance policy doesn't just go into a black hole never to be seen again. You see, like a loving grandparent, the insurance company is gonna take a portion of what you pay each month and set it aside for you so that it builds cash value. Now the idea is for the money to A, grow, and B, be used by you. That means that the money is accruing interest, and it's set up so that you can access it without paying a tax penalty. How could this type of insurance possibly get any better? Misconceptions. All right, so I might have gotten a little carried away there. Look, the cash value aspect of a whole life insurance policy is lovely, but it's basically like putting your money into a savings account. Slow and steady growth. Whole life insurance policies should not be viewed as a lucrative investing opportunity. In addition, let's say you set up a whole life insurance policy with a death benefit of $500,000. You've also managed to build up the cash value of the policy to an additional $500,000. You might be getting pretty stoked about leaving your beneficiaries $1 million, but it doesn't work that way. You see, the cash value aspect of the policy has to be used before you die, or else it vanishes with you into the great beyond, or more accurately, into the insurance company's accounts. Who does this work best for? So by this point, you might be asking if a whole life insurance policy is right for you. And the short answer is, it depends. We always recommend consulting with a licensed insurance agent, and oh look, we just happen to have a website right here you can click on. But because of the higher premiums and the amount of time it takes to build up cash value in your policy, you tend to see individuals 30 to 50 years old with a good amount of discretionary income looking into these policies. Now, if you found this video to be just a little bit informative and not a total waste of your time, don't forget to like, comment, share, and subscribe. Feel free to check out some of our other videos with similar explanations of the other types of life insurance that are out there. But in the meantime, enjoy living life intelligently.